Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello, listeners. Welcome to Business Line's State of the Economy podcast. Ever since Hamas attacked Israel on October 7, gold has moved up sharply. During the last weekend, it topped $2,000 an ounce. Since then, it has stabilized, though a further rise is not ruled out in the event of the geopolitical crisis in the Middle East worsening. For consumers in India, this comes at a time when Dhanteras and Diwali are just days away. How will gold prices behave during Dhanteras and Diwali? How will the yellow metal prices be during the oncoming marriage season? To clear these issues, engaging the minds of consumers, we have with us Mr. Navneet Damani, Senior Vice President, Head Research, Commodity and Currency, Motilal Oswal Financial Services Limited. Welcome to Business Line's State of the Economy podcast, sir. Gold has surged sharply over the last few sessions. What's really happening in gold and where is it headed?
Well, thank you for having me on the show. And over the last few probably weeks and months, we've seen gold prices being a little more erratic than what we've seen usually. Now, coming back 2 years back, we saw that gold prices had shot up very significantly post the Russia-Ukraine war, and a similar kind of consolidation or downfalls were witnessed from probably mid of 2022 till the last month of 2023. In the last month, we've seen war escalating between Israel and Hamas, and that has led to a sudden geopolitical spike or risk premium spike in the bullion prices. We saw roughly prices hovering around $1,800 and are now closer to $2,000. That's a clear 10% spike from lows. This is largely one of the reasons where we are seeing prices being escalated because of the geopolitical risk. And to top it up, we are headed towards a phase where probably Fed might have one rate hike possibility and then a pause, and further as we head towards 24, series of rate cuts could be possible. These are all catalysts for gold prices to be positive in the long run, and seems like geopoliticals has just led to the trigger and started to form a base. So it is a long drawn effect if you see, but the immediate effects are pretty steep and to the tune of 10% in the very short term.
Sir, for people in India, how will the prices be during this current festival season? The Dhanteras is coming, then Diwali, then the wedding season coming.
Well, prices did slide to lows of 56,500 levels, and since just like the international levels, here also we've seen a 10% spike, which is getting close to $61,000 on the domestic bourses, and in the physical market closer to 62,500 and 63,000 levels. I do not see many major fluctuation or major rally in the prices over the next 10 to 15 days as we head towards Diwali. So prices are going to be around those levels, 60,500, 60,000 on the lower side in best case, and maybe 61,500 on the higher side. This could be the range for the short term. And on the physical side, maybe 61,500 on the lower side and 60,000 on the higher side is where we see prices over the next 15 to 20 days.
During the weekend, the Ministry of Agriculture came out with estimates for the Kharif crop, which is lower in almost all crops except two. Now, what sort of impact is that likely to create on the demand for gold in the region?
Demand for gold, I don't see a very significant pent-up demand from the farming season at this point coming out of gold, and it traditionally is no more a farmer's bet that once the farming or harvesting season is great, it is going to lead to a sharp rally in gold prices. We are largely internationally driven, and domestically we've seen the prices rally because of the significant depreciation in the INR. We were at 72 to the dollar previously, and we are at 83 to the dollar before. So, any which way, if there is a very significant demand also, that could lead to a 3 to 500 points premium in gold prices, but it's not going to be very, very significant.
During the Ukraine World War, when the Ukraine war started, prices of gold touched a record high and then came away from there. Is that a trend likely to repeat in the case of this geopolitical tension in the Middle East?
Well, things are a little different from then and now, because that time inflation was pretty steep. Inflation in the US was hovering around 9%. Crude oil prices rallied by about 50% in a matter of, say, probably 2 months during that war. Gold prices also rallied by about 15 to 16% during the war period, closer to lifetime high, and it took its own sweet time to fall and consolidate from 2050 levels towards $1,800. It's not immediate impact that we saw the prices falling in a matter of 1.5 months. It took about 18 months for the prices to consolidate and come down. So similar trend and fashion could be witnessed, but this time things are different. We are headed to a rate cut scenario in the second or probably third quarter of 2024. And historically, interest rate cuts and gold have been going hand in hand together. So if at all that scenario starts and we see US tapering rates from 5.25% to as low as 3% in a matter of next 1.5 year, then it is going to be beneficial for gold prices. So things are different. Inflationary scenario is different. So I would not reckon that it is going to be the same thing as we saw in the Russia-Ukraine war.
Sir, how much headroom is there for the gold prices? What are its support level and the resistance?
Well, on the lower side, I think we've already hit our supports of $1,800 or $1,790, and we've bounced back from there. On the domestic front, if I see 56,000, 55,500 would have been a great support, but market bounced prior to that. Now, another trigger for gold comes in as we see another round of depreciation in the rupee. Mind you, rupee has been consolidating in a very, very narrow range for the last, say, probably 2 months. And irrespective of the fluctuation in the dollar index, rupee has been pretty resilient. So if at all it starts to depreciation, that will add to the domestic currency or probably gold prices upside. Now 62,563 is where we see gold prices in the near term, and that is closer to the previous tops. On the international front, on the COMEX 2070, 2050 levels have been really very, very significant resistance levels, and one price. Those levels are taken off. Maybe I think there is no stopping till 2180, 2200, which could take prices to 66,000 plus levels on the domestic bourses.
Sir, what are the prospects for silver? Because silver hasn't really moved as sharply as gold, but there is even a physical shortage as regards to.
Well, domestically, we've seen silver imports pretty huge in the year of 2022, and this year Chinese demand has been pretty reasonable for silver. This is the third successive year for silver where silver is going to be in a deficit globally. But having said that, it's a mix between precious metal and industrial metal. Over the last 6 months or probably 9 months, I would say industrial metals haven't done anything really very significant on the positive side, largely because Chinese markets have not delivered the way market was anticipating. So whatever rally we are seeing in silver is largely on the back of gold prices or supports coming in from gold prices. Having said that, I think over the next 6 months or 12 months, it's going to be a very tight spot where we see silver prices outperforming gold to some extent, because we are anticipating that Chinese markets are likely to bounce back. Recessionary fears are started to abating. If rate cut possibly starts as soon as the second quarter of 24, then US economy is going to show better signs and indications of growth, which could lead to positive momentum in base metal prices, which will be supportive for silver as well. So our bet is that silver over the next 12 months is going to be very, very a good investment bet, and could give you about returns of 15 to 20% from year on. Also on the buy side, we expect silver to be trading closer to 85,000 in the next 12 months.
So the crisis in the Middle East, pushing up crude oil also. So how do you think is crude oil going to behave and its impact on the inflation?
Well, crude oil, in the last war between Russia and Ukraine, we saw crude oil prices rallying from lows of $75, $76 to highs of $130. That's a 50+% rally. But in the last run where Israel and Hamas is fighting, the rally has been to the tune of 12%. So it's nowhere comparable to what we've seen 2 years back and what we are seeing now. The last time the rally happened, it led to inflationary fears, because the global markets were kind of in a mix between rate hike possibilities, higher inflationary scenario, easy access of money, and these are the catalysts which led to a spike in inflation. But this time things are a little different. Inflation is not going to be very, very easy to spike up, as a lot of central banks have taken measures to hike the benchmark lending rates. A a lot of property and automobile rates have risen very significantly. Metal prices and agro commodity prices have had their share of run up in the inflationary basket, and this time production is pretty decent on most of the fronts. So I think inflation could spike, but not in the similar fashion that we saw in 2022. So of course, 150 basis point jump in inflation could be a possible scenario, because we've seen them falling by about 500 basis point from top, but a very significant run up is not that we are anticipating.
So overall, what sort of impact you see gold, silver, and crude oil costing?
Well, between the three, I think gold has already had a reasonable run up, and immediate triggers will come in only if there is a severe escalation in war. Otherwise, say maybe another $30-40 for gold, and it could start to consolidate from here on. Silver could start to give you better results vis-a-vis gold from a 6 months, 12 months perspective, where we anticipate that Chinese demand is going to be the key driver at this point in time. So it could be positive for industrial metal also, along with that for silver as well. And for crude oil, we do not see crude oil adding significant gains from here. Maybe 5% rally cannot be ruled out, given the kind of war escalation or news coming in alternately from Hamas and Syria. But otherwise, I don't see that WTI would be hovering above $100 and sustaining above that for a very long period of time.
Thank you very much for your enlightening views, sir. Thank you all for listening in, listeners. Until we meet next time, this is Subramani signing off.